Well, hello, traders and investors. I'm LA. This is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. We're using supply and demand to read the charts, to read the tape, to understand where the buyers are, where the sellers are, or at least where they should be. We then measure the test and use that to make sense of what this market is telling us so that we can be on the right side of the trades. If you like what I do, please share it with others. Flickr, Twitter, there's all of those things here on YouTube that you can just simply click, share it on your Facebook and so forth. I really appreciate if you do. Organically, if we can grow this, it takes some of the pressure off of me doing this for a small number of people. The more the better, right? I don't think we're going to upset the markets if we have another few hundred people reading or listening in on what we're doing here. I do this show 4 times a week, Monday through Thursday, broadcast at 4:10 o'clock Eastern Time, archived on YouTube, and it's under channel LA Little. I am coming to you a little bit late tonight. Had a late date that I wasn't expecting, and so it kind of threw my schedule off. But let's run through the charts here. First, let's look at the numbers. It was another up day. That's a 6 in a row if I count them right. And this market, pretty much has a mind of its own right now, and that mind is this V-shaped reversal. Remember, we got the big spike down, and now you got the spike right back up, making new highs. We'll see that in a second. Up 0.5% here. It was the NDX driving it again. The NDX has been driving this thing, folks, all year long. Continues to be the driver. You see it here on the NASDAQ broad composite, trailing on the Dow, and definitely trading on the small caps. You had oil sell off and sell off hard today. Silver, gold down a little bit, and the dollar did get a little bit of a bounce. Over in Europe and in Asia, pretty much on the downside. That's where the markets are. Here's where the market is in terms of where it has gone. Last night I was telling you there's some subtle hints that we've got some problems brewing under the covers, but it doesn't matter, folks. Until it does, it doesn't, right? That was the case back here when you went sideways, you got the big hit. What do? They come right back in, run it to the top, and make new highs. That's new highs on the year. Almost hits an ABCD target. That target was up around 5 points higher, about 4.5, 5 points higher. That's on the S&P. If you look at it on the weekly, you're going to break out on a swing point high on the weekly as well, if it holds. When you get a breakout, 2 or more time frames, what does that mean? Well, that's a free bar or 2, right? And so we can expect another couple bars if this thing can hold tomorrow. That's the S&P. If we look at the Russell, which is the enigma of a failure, the Russell goes up, comes back down, but it does the same thing it did yesterday, and that is volume expands on the failure. When you get volume expansion, you know what that means. You can go do it again. This thing was coming into this bar. That bar's still a problem, right? That's a wide price spread, high volume bar, anchor bar. Anchor bars are what we watch to give us information. You got another one right above it. So as it comes into this zone, that's a very tough spot for this particular market to get over. And with the fact that oil is heading down, that makes it even harder. But nevertheless, this thing can try it again. NASDAQ NDX, that's where the juice was. Another breakout over here on the NASDAQ. You can see the extension on the weekly. And if you look at the NDX, you've got the same thing, another break to the top side. That one never even could print. It went up so fast, and an extension on the weekly charts. I don't see anything here telling me anything different than what I told you last night, and that is that this market has a mind of its own, and that mind is up as long as technology wants to keep running. You've got 2 stocks that are driving this in particular right now, and this is not it. This is your home builders. I've been talking about home builders yesterday. I said, oh, well, they got an under or over, they can get a bounce. Well, they did, and then they came right back down. Folks, this is still going to do what I told you a couple of days ago. When you break under a bullish retest regen zone, which is what it did here. I don't really care if it goes and makes new highs, which is what it did. It wants to come visit the area again. It almost got there 2 bars back. We'll see if it gets there. It's going to try. If you look on the other side of the trade, it's the SOX. The SOX had the failure last night. Doesn't matter. Makes a new high. Why? Well, because it's technology, and that's what we were just talking about. XLK breaks out. You've got Amazon and the discretionary pushing towards the highs again. You got healthcare pushing towards the highs. You've got consumer durables breaking out here on the daily, on the weekly, on the monthly as well. Folks, it is a consumer fest, if you will. Industrials, another of the big sectors, continuing higher. You've got pain points in that ITB. You've got it here in the XLF. You also have it especially in the energy market. But these don't carry, well, the finance does, but these others don't carry that big a weighting. The other one is basic materials, and those are not the ones driving this market. The ones driving this market are the technology in particular, and then you have those other sectors I just pointed out. What does it all mean? Well, it means that if you want to stay on the right side of the market, then you want to stay mostly in these technology stocks. Whether we're talking about something boring like, say, Comcast, for example, they go up, touch a new high today, have volume expansion, or something a little bit more in the mainstream in terms of technology like an eBay making new highs. Or if you go on down the list and you look at the dual run for 1,000 with Google and Amazon, those definitely making the move. What does this hit? 995, almost 996 today. Amazon hit 999. You got Microsoft breaking out again. You've got all kinds of technology that keeps going to the upside, and they're big cap technology that's making those runs, and that, folks, is what's moving this market. Another day of up. Tomorrow looks the same. You know, we're going to get a reversal at some point, but you know, if you make a reversal from 100 points higher, it doesn't really matter if you were trying to play it short the whole way up, right? You're going to lose money. When the market's like this, you either stay with the long side or you simply stay on the sideline. You can't be trying to short it until you get a signal, and this tape isn't giving you one. Have yourself a great one. I'll see you next week. Take care. Until then, I'm LA. This was your daily NeoTA wrap. Have a great one. Good night.